Okay, so now I'd like to introduce you to some of the tools that I use as a trader. This will be but one ingredient within a sea of many, of course, from these complete trading strategies. But I'd like to introduce you to what I call the cradle zone. And the cradle zone is designed around the 10 and 20 period moving average. Now these are just simple indicators that you can put on any chart that you wish. They're free and they're easy to use. The 10 period moving average is the representation of the last 10 candles. It's just smoothed out. It takes 10 candles, averages it out on a line and puts it on the chart for you. The 20 period moving average does exactly the same. Now I use the exponential moving average if you wanted to know, but don't worry about that, we'll show that to you another time. What it's designed to do is show me an equilibrium point, a point at which markets pull back to before they get ready for their next move. Now I will say this, it doesn't work 100% of the time, and this is not a trading strategy. It's introducing you to some of the tools that I use so that you can see just how powerful they are. And I actually encourage you, if you've got access to charts right now, and if you have done a bit of trading in the past, to put the 10 period and 20 period exponential moving averages on your chart, on any time frame. And when it trends, you watch where the price pulls back to. So, I want to show you a few examples now and test your ability. Example 1, see how it pulls back into the cradle zone and then moves away. Again and again and again. And example 2, once again, pulling back in to that equilibrium zone. Now, on this third example, I want you to stop and think what might come next. Pulling back in, what do you think might come next? That's right, it didn't turn out. Why? Because this is not a trading strategy, guys. This is one tool that I use. The cradle zone is the crypto cradle trading strategy that I teach as well. Now, there are a number of essential factors to be met for this particular trading strategy, and unless you've got all of these factors ticked off, you don't go and look at the bonus factors. If there's one essential factor missing, it's just off. I also want to introduce you to some support and resistance. You see, I teach 3 trading strategies. One is when the market moves up, pulls back, pauses. That's like crypto cradle, and then it moves. The other is when markets go sideways for a period of time, because this is what markets do. And when they go sideways for a period of time, sometimes opportunities for explosive moves come following that. Here is support and resistance at its best, and this is how I use it for actual entries. Example number 1. Notice 3 tests of resistance as a minimum. Price breaks out, and explosively. Example number 2, 3 tests of resistance, breaks out and fails. Why did that one not work? Well, I want you to stop and think on this next example and come up with your own view. What do you think the price does next? It breaks out and moves higher in this case. Again, ladies and gentlemen, support and resistance by itself is not a trading strategy. Just the same as a cup of sugar does not become a chocolate cake. These are singular ingredients in a recipe for your success as a trader. But again, it comes down to you and how you implement these. You need to become a master of these strategies, and I'm not trying to create little mini-me's running around the world trading these strategies. No, because you'll trade slightly different to me. You'll create your own methods, but you'll still be using these strategies. For example, some people might choose to not take this one, but they will take this one. That's what the bonus factors are there for, to help you to find out the highest probability outcomes. So these are just a couple of the different things that I use, and there is a strategy that I won't touch on just yet because it's a little bit more complicated, and it's there for those of you that really wish to take that next step into trading. But you can see with some very simple visual tools, we can actually start to find a bit of a pattern forming in the markets. Now, it doesn't mean that all the trades are going to work out in your favor. That's why risk management is so important, and that's why there's a whole lot more with these strategies. Lots of checklists to follow, but it's something to follow, and it keeps you disciplined. Now, all of these examples so far have been when the market's moving higher, and there's a reason for that. I just want to make it nice and easy to understand. But both strategies can be employed in a falling market. In fact, all my strategies can be employed in a falling market, which truly makes them somewhat recession-proof and market-proof. To be able to make money either direction means you can always make an income. So here's an example of a cradle zone in a downtrend. Notice how it's the same. Pulling back into that zone and falling, back into that zone and falling. Now I'll flip it over to the other one, the breakout. The level of support. Once again, the same view is taken of 3 tests of support, the floor underneath my feet. Once that level breaks, have a look. The market continues to move lower. Again, we can use these strategies in any crypto market at any time frame that you like, provided you stick to the rules of optimal chart structure and the essential and bonus factors. But guys, there'll be a lot more of this later on. If the trading is something that truly you want to follow, then we'll show you more about how to short, because I know that sometimes you can get a little bit lost in the detail there. It's just a direction thing. You choose to either buy, go long, sell or go short, and we'll teach you more about that another time.
The Trader Cobb Crypto Show, talking business in blockchain.